If the fair value based on Metcalfe's law by next April is 100K, we're 40% of the way there. And, the next halving 4 years later, we always add a zero. So we 10x every halving. So we would go to $1 million at the next halving. And then the halving after that, in theory, we could go to 10 million. You replace all global currency with Bitcoin. Technically, totally sound, right? It's a better form of money.
Bitcoin halving cycle occurs every 4 years when the rewards of Bitcoin miners are cut in half. The next one is slated for April 2024. During the previous cycle, the fair value of Bitcoin was estimated to be around $30,000, but it eventually rose to $69,000. Morgan Creek Capital founder Mark Yusko says that a parabolic rise is on the horizon for Bitcoin as hundreds of billions of dollars worth of institutional capital is set to flow in. On September 20th, the Federal Reserve held the federal funds rate steady at 5.25% to 5.5% amid inflation jumping in August to 3.7% annualized from 3.2% in July. Federal Reserve Chairman Jerome Powell reported in the central bank's press conference that the rate hikes might not be done yet. Now, amid the tightening, the M2 money supply has decreased by $1.3 trillion to $20.7 trillion, marking a 5.9% drop. As U.S. debt accumulates at staggering rates and central bank fiscal policy continues to diminish the purchasing power of the dollar, the case for Bitcoin as an alternative store of value, free from government manipulation, grows stronger. During the interview, Yusko mentioned that, in the current situation, what he considers more crucial is the Bitcoin halving cycle. He believes the fair value of Bitcoin by next April will be $100,000. Now, let's direct our attention towards the few clips from interview.
The macro environment is very unique in the sense that we have a Fed that jawbones that they're committed to removing liquidity from the system. And they actually have successfully decreased the money supply, the M2 money supply, for the first time in over 100 years. So that's actually saying something. While conversely, around the world, central banks are starting to loosen the spigots again. You're starting to see people cutting rates for the first time, particularly places like China. So that macro backdrop of monetary policy is kind of mixed. The part that isn't talked enough about is fiscal. The fiscal policy spending, and that's what that debt is reflective of. Look, we put over 1.4 trillion with a T dollars into the economy through these government programs. And whether that's my favorite is disability payments. And the number one new disability for people, stress. I'm like, I have stress, you have stress, people have stress. I don't think that should be something you receive disability payments. But it's essentially a shift from unemployment benefits to just handouts. And you got the student loan relief, you got all kinds of programs that are getting slammed through DC, basically to buy votes, right? That's what this is all about. And then on top of it, you've got the money laundering. I probably shouldn't say that out loud, but the money laundering that's going on in Ukraine. And you throw all that together, look, you give me $1 trillion, I'll show you a good time too. And that macro offset is why we didn't have the recession that 99% of economists were forecasting the beginning of this year, and why economic growth has gotten back to stall speed around 2%. There's nothing to write home about. It's not awesome, but it's kind of where we're going to be stuck for the next couple decades as the boomers, my brethren and sisterin, continue to retire 10,000 people every single day for the next 14, 15 years. So that downward pressure from a working age population perspective and a productivity perspective is going to put pressure on economic growth, which is going to put pressure on lawmakers and monetary policy rulemakers to try to keep the party going. So all of that said, someone asked me, what do I think is going to happen to Bitcoin in that type of environment? And I actually think it doesn't matter. Why would I say that? Well, what I think is more important is the halving cycle. The halving cycle has kind of engaged. We're in crypto summer, which is the third season or second season if you follow spring, summer, winter, fall. People think crypto summer means straight up. No, crypto summer means a gradual increase toward fair value. And we reach fair value sometime around the transition to fall, which will be right after the halving next year. It's that crypto fall period post-halving where you get the parabolic move.
While the crypto market is currently juggling to stand up, the news about a possible spot ETF of Bitcoin spread euphoria in the community, especially for institutional and retail investors. According to Yusko, Bitcoin is poised for a parabolic rise, led by an institutional capital inflow of hundreds of billions of dollars. The approval of a spot ETF by the SEC would signal a significant endorsement of Bitcoin's legitimacy and potential as a mainstream investment. It could pave the way for not only the predicted $300 billion inflow, but also for greater institutional participation in the cryptocurrency space. There may be over 10 financial giants filing to launch a Bitcoin ETF, but according to Yusko, BlackRock's application may be the one to watch. Now, let's direct our attention towards the few clips from interview.
The ETF, it's big. So when BlackRock's ETF gets approved, which it will, now I'm not going to tell you what day, but I'm telling you BlackRock's will get approved. And I'm going to go out on a limb and say none of the others will get approved, which I'm kind of sad about because I own pieces of two companies that are first in line. When the BlackRock ETF gets approved, somewhere between 30 billion and 300 billion is going to come into Bitcoin.
That's insane.
Where's that number come from? Well, there's 30 trillion in boomer assets held at UBS and Merrill Lynch and all these places that don't allow you to buy crypto today, right? I have a family harmony account at UBS, my brother-in-law, and every time I try to buy something related to crypto, UBS says no. No GBTC, none of the miners, nothing. And fine, whatever. But once BlackRock gets approved, they're all going to have to buy it. And whether it's 10 basis points, which would be 30 billion, or 1%, which I'll argue is going to be 1% plus, that's 300 billion. The whole market cap of Bitcoin is only 500 billion. So 300 billion, and it's not on 500 billion, it's on the free float, which is only about 100 billion. So 300 billion of new capital on 100 billion of free float, which is minus the hodlers and the Satoshi wallet, et cetera. That's going to be a big move. So that's big. But what you're talking about is way bigger. So over the course of the next, 15 to 5 years, all of us, whether we like it or not, we're going to pass. And, it's just part of life. We're going to pass. And that $40 trillion is going to our kids, the echo boomers.
SEC's approval for Bitcoin ETFs could open the door for institutional and retail investors to invest in the cryptocurrency securely. Bloomberg senior ETF analyst Eric Balchunas estimated that approval would result in an inflow of roughly $150 billion. However, Yusko articulated a more optimistic outlook. Also, the Bitcoin halvings are considered major drivers for price growth in the crypto market, with the next one due in spring 2024. This concludes our discussion for today. Feel free to share your thoughts in the comments section below. If you found this information valuable, please give it a thumbs up and consider subscribing to our channel to stay informed with the latest news and videos. Thanks for joining us.